and really just like kind of pull back the curtain a little bit on what is actually going on with mortgage interest rates. If we haven't met, my name is Chelsea Winstead. I'm a home financing strategist and a mortgage broker. I help hundreds of people every single month from this app create a home buying plan and strategy to be able to confidently purchase a home in 2026. Let's dive into what the headlines say and really what happened. So as you probably saw last week on Friday, there was a big announcement that essentially said mortgage rates dropped below 6% for the first time in a really, really long time. But there's a lot of missing context and components that I think are important for you to understand. So let's start kind of from the top. So number one, where mortgage rates really come from is they are driven by mortgage-backed securities or MBS. They're bundles of home loans that trade in the bond market, okay? So when mortgage bonds go up, the rates that you pay drop. And when mortgage bonds fall, basically like the demand, the rates go up. So this is the engine behind essentially what happens in the mortgage world. Now, when Trump made his announcement that the government would start buying large amounts of mortgage bonds, this matters because when you talk about more buyers for mortgage bonds, this means that the bonds have higher prices, which then means that the yield is lower. And that yield is actually the rate that you as a borrower will pay. So the market pretty immediately reacted to this announcement. Okay, so what happened? So rates briefly fell below 6%. Okay, so this did happen, but it's not, I think there's a misunderstanding. I got several text messages about this morning. So bond traders rushed to mortgage bonds when this announcement happened. And lenders reacted by publishing essentially like lower rate sheets. So when I mean a short window, I'm talking like for an hour. Some lenders were showing sub 6% rates. So the headline was true, but this didn't last. Like it literally happened within an hour. So when this trading happened, traders made profit, bond prices pulled back, and then lenders repriced higher that exact same day. So the dip below 6% was a volatility spike. Mortgage rates are repriced live on bond trading. So here's the thing. A lot of what you see is news, it's attention grabbing, it's headline seeking, and that's what it did. But like basically all of this stuff was like mortgage rates drop below 6%, and they didn't put for an hour, right? Like, and let me tell you what's the truth on this. Now, in general, we are projected to see mortgage rates essentially stay on the low sixes, maybe high fives. What this does do for a lot of people is it allows a lot of people to re-enter the home buying market that have been sitting out on the sidelines for quite some time. Now, there will probably be continued pockets like this where if you are within 30 days of closing on your home and you're already under contract, and like, so basically on Friday, when that window opened up, if somebody locked in their rate within that window, obviously winner, winner, chicken dinner. Also, to be fair though, I think people don't understand that movement on rates does lower pricing, but probably not as much as you would think. I'm actually gonna do a whole other video on that. But here's what does happen, and then here's what is going to happen. Because this is making such massive headlines, right? Like everyone's talking about it. It's all over the place. It's all over the internet. Agents are resharing it. Like everyone's resharing this whole rates under 6%. What it's doing is it's drumming up a lot of interest for people to enter the market. So even though technically when you actually pull the cover back, did that happen? Yes. But did it stay? No. And literally within an hour it changed. But it's that headline that a lot of people grab hold of. And because of that, and I always say this, there is perception and there's reality. Perception is what creates behavior. The perception, right? And it is true that rates have dropped pretty significantly over the past 6 months. And more people are re-entering the home buying market. But big headlines like that turn heads, right? So people that have been like kind of like chilling, they're like, I don't really know what I want to do. When they see that headline, that is what causes someone to go, you know what? We should actually go ahead and run our numbers. You know, maybe this is the time that we should get started. That seems pretty promising. And so that's what tends to happen is the actual numbers on paper aren't always what the media portrays it to be, but because the media is picking up the information regardless, you're going to now have natural behavior of people coming back into the market and saying, oh, you know what? Actually, I would like to run numbers, or actually we should, you know, like re-enter, or like, let's see what's possible. And so the big thing that I would say is the major takeaway that I have and my expectation is, because this is making such a big headline, what I am expecting to see is I'm expecting to see more buyers wanting to get pre-approved, more people doing their pre-qualifications, more people getting started because of the information that is being shown. With that being said, a little bit of this is showy. It's not actually, like, rates are currently not under 6%. With all of this said, if you're interested in seeing what your personal numbers would look like, figuring out what is possible for you to be able to potentially purchase in 2026, I would be more than happy to run some numbers for you, put together a plan, and show you basically what's possible within the market that you want to buy in, the monthly payment that you are willing to pay, and the current money or down payment that you have set aside. Again, I help hundreds of people do this every single month on this app. Love all of you. Very blessed to be here. Comments are always open if you have questions. Best way to get a hold of me is link on my profile.